In Europe, we were very fortunate because we had MiCA. It gives a framework to regulate how companies can interact with stablecoins, how they can use it. And that gave really more trust into what we do. So that fueled a lot of institutional adoption in Europe. We're seeing demand for our euro-denominated stablecoin. It's not as large as our dollar-denominated stablecoin. However, the majority of the financial institutions that we work with in Europe, they want a euro-denominated stablecoin too, especially to be used as a cash leg on chain and also to be able to transact and send value in certain corridors. So we are seeing traction for our euro-denominated stablecoin as well, but obviously not as big and not as large as USDC, but still very relevant to our strategy. I think still, if you talk to anyone on the street, they will still associate stablecoins with the broader cryptocurrency Web3 space. And I think a lot happened in the industry in the past years that gave birth to some misconceptions. There's a lot of educations that needs to be done to say, hey, this is actually a regulated space. But I don't think the majority of people realize that.
Hello, welcome everyone to the New Money Podcast, the show where we talk about crypto, where we talk about stablecoins and find out, hopefully, how the future of money looks like. Today with me, I've got Sanja Kon from Circle, and we're excited to talk about all things USDC, stablecoins, and the evolution of the market. Sanja, great to have you with us today.
Thank you for having me and great to be here.
Amazing. Hey, Sanja, I wanted to jump in and kind of talk about your journey for a bit. We talked to a number of folks in prep for this episode who told us you were born in Sarajevo, and that upbringing actually shaped and kind of in a way impacted your journey into crypto, into finance quite a bit. Walk us through that journey and how you ended up here.
Yeah, definitely. So I was indeed born in Sarajevo in Bosnia, in a country that was torn by war. And I was fortunate enough that literally a couple of months before the war, my family moved to Italy, so we were safe. However, we had a lot of family and friends who stayed in Sarajevo when the war started. And although I was very little, I was 6, 7 at the time, I really remember that fear and that feeling of the banking system collapsing, losing money, and more importantly, really not being able to send money back home to our friends, to our family. So blockchain was not a concept or at the time, or Bitcoin or stablecoins, of course. But the question always stayed with me around money and how you own money, how you create money, how you transfer money. So that led me really to study economics later in life. And then I ventured into the tech space. And finally, in 2017, I was working at PayPal. So my team was building the payment solution for marketplaces. And there was a lot of cross-border trade involved in that product. And I remember vividly thinking, wow, we're not able to say the cost that the customer will pay at the end of the month for the business that they're flowing through our platform. So that led me to study blockchain on my own. I met who became then my co-founder. We co-founded a company that was a payment service platform very early in the years. 2018. So we were one of the first crypto to fiat payment service providers. Obviously, at the beginning, it took some time for demand to be there because we were allowing anyone to pay with crypto and predominantly stable coins and USDC at the time. And then for anyone to settle that payment into fiat or crypto. So that was a successful venture. We made an exit to a layer 1 blockchain. And finally, this is what led me to Circle, because now I can do this at scale. So I can do this with the largest enterprises, platforms, fintechs, and innovative companies that really help us distribute our stable coins, our infrastructure, our technology across the globe. So anyone can own a digital dollar or a digital euro, and you can transfer money instantly. So yeah, that was a long story, but that's why I'm here.
Yeah, and we're going to talk all about that. Before we jump right in, if you reflect on the kind of like being early to the kind of like crypto fiat on-ramp, off-ramp space, what would you say was the hardest part about that business as you were building it up?
So we're talking about 2018, 2019 and Europe. So the hardest part was educating the merchant side because the demand was there for retail customers to pay with digital currencies already, especially from countries with higher inflation or even countries that went through a war. So there was distrust in the government and they were already holding Bitcoins or stable coins and they wanted to spend it and they wanted to use it as a form of payment. But the hardest part in that like two-sided marketplace was to educate the merchants, the platforms in like, why do you need to do this? And the main convincing point at the beginning was, hey, this is going to open up a new customer base for you more than you're going to save costs. And that was like a second step for them. When they opened up, they were realizing like, wow, not only I have more customers, but also I'm saving a lot on fees if I settle directly in stablecoins.
In the day, kind of like 8 years ago, like which merchants did it stick with? Like which merchants bought into the value proposition first?
So it was obviously the crypto natives at the beginning in the first few years, and then kind of like scaling up to all the different verticals. But yeah, I think first couple of years, it was predominantly the crypto natives, the Web3 friendly platforms that kind of like grew with us.
Awesome. And if you fast forward to today and if you think about the work that you're doing with Circle, is that still like a focus area for you guys to kind of like try to crack the merchant, like the C2B payment use case? Or are you most focused on other use cases right now? Because I've always felt that this has been pushed to the background a bit, because I felt that there was some sort of like intuition that people are not that keen to pay with digital assets, to pay their groceries with digital assets and all of these things. But you can walk me through what you're seeing in the market, maybe.
Yeah, it is one of the use cases. Obviously, we work with different verticals, different use cases. There is less the need today to educate the platforms and the merchants, and especially in a market like Europe, where we have regulation. So that really drives institutions to understand what this technology is, to understand what the upsides are, and to understand why they want to work with us. So yeah, some of our customers will have the use case of consumers paying with digital assets. Some other use cases might be settling with digital assets or using them for treasury or wholesale money movement. So I think it really expanded, and now really it's about working with different verticals, different companies on different use cases.
Awesome. And let's talk briefly about the Circle Payments Network, which you recently launched and which kind of contributes to that initial idea that you also kind of like it came from, right? Like, how can we make sure we move money better, faster, cheaper, in a more transparent way across the world? Walk us through maybe the kind of like broader idea of the Circle Payments Network and what that contributes to the Circle ecosystem beyond what USDC was also already able to do.
Yeah, for sure. So as you said before, the Circle Payment Network was born to really respond to this inefficiency of moving money across borders. And for sure, everyone who has tried to send a payment internationally or in certain corridors of the world, they will know that it's extremely costly. It's very inefficient. It takes a long time. It can take days to settle. You need to go through many corresponding banks. So this is basically the pain point that the Circle Payment Network is solving. So the network is our institutional network for on-chain settlement. And it's designed for really the institutions, the banks, the neobanks, the virtual asset service providers, the digital wallets that want to move money globally with the speed, with the transparency, with the programmability of the internet. And all of that basically using regulated, fully reserved stablecoins like USDC or EURC as well. So basically what happens in the network is instead of passing money through chains of corresponding banks or other type of intermediaries, the participants of the network can settle near instantly on chain, and they can reconcile against the shared ledger, and they can embed business rules directly into the flow. So why this matters for us and why this matters for anyone who participates in the network is that it really brings that predictability and control to cross-border payouts, to collections of payments, to treasury operations, and you get faster settlement and you get real-time visibility. So this is very important for Circle, and it's a very important journey from being a stablecoin issuer to really becoming a platform-based company and building really a two-sided marketplace platform.
I'd love to understand an example of this payment flow and someone interfacing with the payments network a bit better. Maybe walk us through a case study or an example of how a merchant, a fintech, would use the Circle Payments Network and what different participants would be involved there.
Yeah, for sure. As I was saying, it's a two-sided marketplace. So on one side, you have what we call OFI, originating financial institution. And on the other side, you have what we call BFI, beneficiary financial institution. So the OFI will be responsible for sending out the payment on behalf of the customer. And the payment will be originated. It doesn't have to be, but today, let's say it's originated in a fiat currency. So they will take that fiat currency, let's say it's dollars. They will convert that dollar into USDC, and they will send that USDC to the wallet of the BFI company. And then the beneficiary financial institution will take that USDC and they will convert that USDC into local fiat currency for whatever corridor they're sending money into. So all of that chain looks like a very difficult and complex operation. But from beginning to end, we're really talking about a few minutes for the operation to be completed. And this is why it's remarkable. And today still, we like to think that the majority of the payments will move on chain. But today we still need to originate a payment in a fiat currency, and we might need to off-ramp it into another local fiat currency. So what we are enabling is to really use what we call the stablecoin sandwich. So you can use USDC or EURC to settle that payment instantly. And it can be seconds, it can be minutes, like depending on the blockchain that you're using. But that's fundamentally the value. And that's the advantage that the network brings.
That makes sense. So basically what you're saying is like, hey, there's an on-ramp on one side, off-ramp on the other side, and Circle is kind of like creating a marketplace to make it easier for these two sides to connect and to create like standards, comparability, accessibility to enable these money flows. But where do you feel is the distinct value proposition of Circle that will ensure that people are not kind of like forming these direct relationships, but rather go through that marketplace and leverage Circle Payments Network?
Yeah, great question. I think it's really the network itself, because today, if you need to send payments across multiple corridors, what happens is that you need to form relationships and bilateral agreements in each single corridor that you're operating. And that requires, operational efficiency. It's costly. You need to spend time finding the right partner per corridor. While if you're using the Circle Payment Network, you get all of that through one single integration. So it's really one-to-many, like through one integration, you have the opportunity to transact money in multiple corridors. And you can even decide, let's say I'm a bank, I can decide that within the Circle Payment Network, I only want to interact with other banks. So you can set up your own rules with who do you want to interact with as well. So that's the beauty of the network.
No, that's awesome. And speaking of kind of like the build out towards becoming a platform and kind of like a broader ecosystem for payments, you guys recently launched ARC, your own L1 for stablecoin finance. What's the value proposition? What's the thesis here? Like, why does the market need ARC and how does it work?
Yeah, so in a nutshell, ARC is an open EVM compatible layer 1. And we are designing ARC specifically for what we call stablecoin native finance. So anything that touches payments, FX, capital market workflows. And the premise is simple. So if dollars are how businesses prices risk, the chain should be dollar native too. So with our USDC is used as the gas fees, and fees are predictable, dollar denominated, and you don't need a volatile token to conduct your business. So imagine that you are, again, a bank or a large regulated entity, and now you are using one of the traditional blockchains. You might not even be familiar with paying gas fees or having to hold a token, and then that token is volatile. So it's really creating a chain that responds to the needs of, enterprise grade, enterprise level, that gives you the security that you will not have volatility and that the fees will be paid with USDC, with a regulated stablecoin behind it. And really one layer on top of that. So our targets second finality. It has an opt-in privacy for sensitive transactions. And we're also planning a built-in FX engine. So moving between regulated stablecoins can be quoted cleanly and can be settled economically. Of course, just to say, that doesn't replace the fact that Circle will always be multi-chain. So USDC will be available on more than 25 chains today and more to come. So this is not to replace what is already existing.
So you lead partnerships for Circle and EMEA, and Circle recently partnered up. We're very excited to do so, right? I feel Ivy's approach is to really build the highest quality stablecoin accounts, right? Make sure that for the merchants on our platform that interface with our bank accounts, that do payments on our platform, they can treat stablecoins like they treat fiat. And these things are fully interoperable on our platform. And partnerships with the key issuers like Circle are kind of like very important part in executing that strategy. And so we're excited to partner up with you and like keen to get your 2 cents how that relates to Circle's strategy, how you want to interface and continue to build with financial institutions.
Yeah, thank you. We're very excited about this partnership, and Circle's approach has always been to partner directly with companies, enterprises, payment service platforms that can really help us scale the reach of our stablecoins or our infrastructure. And this is why we are excited to partner with Ivy, because you're integrating both components, basically. So there's the stablecoin part and then there's the infrastructure part. Circle, to go back to your question, Circle does not offer directly services to retail, but it does so through partners like yourself and others. So we are very excited. And I think, pairing now the Circle integration with Ivy will enable your customers to not only access, but, transact, convert with stablecoin in real time and 24/7. So leveraging your API, your customers will now accept bank payments and manual bank transfers, sell funds to local collection accounts, and then they can seamlessly convert that into USDC and they can issue payouts in fiat or stablecoins. So hopefully that's just the beginning of what we can do together. And I think it's very exciting.
Yeah, likewise. And it's been great to work with the team and we've been all having a good time. I briefly wanted to zoom out and kind of like talk about geographical focus, right? You have a pretty broad geographical mandate, right? You do Europe, Middle East, Africa, very different regions. How do you see the kind of like different use cases vary between the three? Where are you spending most of your time on right now?
Yeah. So I've been leading Europe for the past few years. So I joined Circle 2 years ago. I recently inherited Middle East and Africa, which is super exciting. But I spent most of my time building the European market. So in Europe, I think we were very fortunate because we had MiCA. So although MiCA is not perfect and, without going into the details of why it is not perfect, I think it gives a framework to regulate how companies can interact with stablecoins, how they can use it. And that gave really more trust into what we do. So that fueled a lot of institutional adoption in Europe. So when I think about Europe, I think about institutional demand. So we work with the largest banks, neobanks, the largest fintechs, the largest remittance companies on a multitude of use cases. Those can be, custody use cases. How can we help not only custodians, but banks, neobanks, custody digital assets, either for themselves or because they want to offer it to their retail customers or to their wholesale customers. The second bucket is really anything related to payments and specifically cross-border trade. So how can we help companies like IB incorporate USDC and URC into their payment flows because they want to solve the problem of cross-border trade. So they want to give their customers access to a better way to send money and receive money that can be really done near instantly and lower the costs for themselves or their customers. We're seeing a lot of, in Europe, treasury use cases as well. So there are a lot of companies today that for the way they operate their business, they need to pre-fund multiple accounts in local currencies. And today they can replace that by using USDC. So that means you need less capital and you can just use USDC and move it as well during weekends, during holidays. So that decreases your cost of pre-funding and money that you would usually have in transit. And then last but not least, referring to Europe, there are a lot of emerging use cases of tokenization. So how can we provide all of these emerging platforms a way to use our stablecoins as on chain to be able to on-ramp from stablecoins, settle trades instantly, to move across different types of assets instantaneously as well. With regards to the Middle East and Africa, I suppose some of the use case will be very similar. I'm very excited to tap into the opportunity in the Middle East and Africa too very soon.
That makes sense. A couple of follow-ups on that. Like, how bullish are you and what's the overall view on the euro-denominated stablecoin? Because I think largely the non-USD denominated stablecoins have struggled to really gain meaningful traction and supply. What's your thesis on that part of the space?
We're seeing demand for our euro-denominated stablecoin. So it's not as large as our dollar-denominated stablecoin. And I think, that's fair to say, and that's what we anticipated. However, the majority of the financial institutions that we work with in Europe, they want a euro-denominated stablecoin too, especially to be used as a cash leg on chain, and also to be able to transact and send value in certain corridors. So we are seeing traction for our euro-denominated stablecoin as well, but obviously not as big and not as large as USDC, but still very relevant to our strategy.
And let's jump into a quick round of quickfire questions to kind of wrap it up. So, Sanja, what's the biggest misconception about stablecoins?
I think still, if you talk to anyone on the street, they will still associate stablecoins with the broader cryptocurrency Web3 space. Also, there's a big difference between, fiat-backed stablecoins, rhythmic stablecoins. And I think a lot happened in the industry in the past years that, gave birth to some misconceptions. So I think, there's a lot of education still that needs to be done to say, hey, this is actually a regulated space. But I don't think the majority of people still realize that. So there's still a lot to go, still a lot of education. I think that's the biggest misconception.
What's the most exciting crypto hub for you in Europe, either country or city?
Wow. It's not only one really, because we see demand from multiple countries. And of course, through MiCA, we're able to operate in 27 member states. So really, I would say there are multiple hubs.
Awesome. I mean, Sanja, you've built your own company. Now you're working at Circle. What does Circle get right as an organization?
I think the main point is the fact that we have always been compliance first, always. We have always worked with the regulators. We have lobbied for a framework to be established, even when nothing existed in the past, because our CEO and our leadership team always had the vision that this industry will be regulated and we need to collaborate with the policymakers, with the regulators to really build this together. so that there is trust in the industry. And that's, I think, the piece where Circle really got it right. And now we're, paying the dividends of it and being happy about it, because what others might start to build now, we already have in place.
Hey, Sanja, thank you so much for joining me today and talking all things CPN and ARC and the Ivy and Circle partnership. It was lots of fun. To everyone who listened, thanks for tuning in. We do this every week. Sanja, see you soon.
Thank you. See you soon.